A new inflation report, PPI, the Producer Price Index, just hit the tape, and it was a hot reading showing that inflation is moving higher and it is pressuring markets to the downside. And here's the thing, this is not even factoring in the US-Iranian war, and that could mean there is more downside ahead in the markets. Find out what the impact will be for your portfolio and trading in this video. All right, ladies and gentlemen, I wanted to talk to you this morning about the new inflation report that just dropped today at 8:30 a.m. Eastern Time on Wednesday, March 18th, and that is PPI, the Producer Price Index. And you could see that it was forecasted to come in at 0.3%, but it ended up coming in hot at 0.7%. And you can see here, the producer price inflation month over month for final demand measures month over month changes in the price for commodities sold for personal consumption, capital investment, government, and export. It is composed of 6 main price indexes: final demand goods, which includes food and energy. Keep that in mind when we talk about oil and the Iranian conflict. Final demand trade, final demand transportation and warehousing services, final demand services less trade, transportation and warehousing, and final demand construction, and overall final demand. And you could see that this spike that we have is pretty significant, 0.7 versus an expectation of 0.3. And this is the highest reading that we've had on PPI. We'd have to go back to this past August when it was forecasted to come in at 0.2, and it came in hot at 0.9. We got some weakness in the markets at that point, and we did have some cooler reports that followed from there. But this spike in inflation is worrisome to the markets, to investors, because what is not even factored into this is the war between Iran and the United States, the bump in oil prices that we've seen, which is causing inflationary concerns in terms of whether or not this conflict lasts, if there's a long duration. And if that's the case, those oil prices that have spiked, they're going to go even higher, and that's going to increase inflation. And why is that important? It's important because when inflation is low or moving towards the Fed's 2% target, the Fed then can cut interest rates. And prior to this report, there were solid chances that the Fed was going to cut twice in 2026, with the first potential rate cut coming in June. With this new data, however, and with previous reports and with the war efforts, that could drop to just one cut or potentially even no cuts this year. And markets love rate cuts. When they don't get rate cuts, you see movements to the downside. And that's what I wanted to show you here today, is that when this report was released here, we're looking at the S&P futures. You can see that we just had a big smash down, right? And at the time that I'm recording this, futures are down 30 points. And what's interesting is futures actually climbed overnight and peaked at about 2:27 a.m., moved sideways. And then at about 6:21 a.m., they started dropping earlier. So you have to wonder if that producer price index report got released a bit early, but we are seeing downside pressure on the markets. We're seeing downside move on Bitcoin here, and really all tickers across the board pre-market are falling lower. And so what this is going to bring into question is this enough of a negative catalyst to push this market finally down to that 10% correction? Here's the thing. It's not just going to be one piece of information alone that's going to drop it. It's going to be multiple pieces of information. And if you take into consideration that we have this conflict going on between Iran and the United States, that's weighing on things, that's weighing on sentiment. You still have the fears of AI being overhyped. You still have the fears that the stock market is overvalued because we still are range bound and still hanging out near all-time highs. You have all those factors pressing down on the market right now. Now, here's the other thing. What's going to happen today at 2 p.m.? We're going to get the Fed rate decision. More than likely, they are going to hold rates steady. They're not going to change them. But we're also going to get the dot plot from the Fed, which is going to tell us how many rate cuts they are projecting in 2026. And you could rest assured that after this data, after the data that's been coming in with the war efforts, you're going to see the number that were projected the last time decreased. And the question is, has the market priced that in or have they not? If they haven't, you're going to see a bigger drop today and in the days that follow. And then here's the final piece. At 2:30 today, Jerome Powell will be speaking. He's going to have his press conference. I will be live streaming that here on the channel. More than likely, Powell is going to come out hawkish, and we can see a massive downside move in the markets. And the pattern that has been holding true here the last 2 weeks in the month of March is the big drops get bought up early in the week, retest the 10, and then the lows get taken out. Last Monday gets bought up, retest the 10, drops. We got bought up, retested the 10. So let's see if we take out that low from Friday of 66.2537 on the SPX, and if we start our descent below the 200 down to that 10% correction area. And here's what I'll say. I don't think this is enough to send us into full-on bear mode, because I do think this war will get resolved sooner rather than later. I do think inflation will begin to stall. We're just getting some hot reports here at the end of the month. But that 10% correction, if we get it, this is where I think you will really see buyers step back in. So I wanted to share that with you. Again, pressure down on the markets following that hot PPI report. So let's see what happens today. The market wants its rate cuts, and this PPI report puts that in significant jeopardy. And my question to you, is this enough to drop us 10% to reset valuation so we could start the next leg up in the market? Or is this going to send us into even more sour sentiment and the start of a bear market? Let me know in the comments below. I would love to hear your take. I appreciate you watching. And as always, make it a great day, honor the moment, and most importantly, be grateful. Take care, everyone.